ready for retirement? How many of you guys have been preparing for retirement? But today we're going to discuss what a Roth IRA is versus a traditional IRA is. Key things that, are different among them. But my question to you is, are you ready for retirement? Are you focused on getting to where you need to be for retirement? Well, hey, this is going to help you get to where you need to be and, give you a little insight to what a Roth IRA is and what a traditional IRA is. And also, which one's going to work better for you? Let's get started. It's your boy. Let's discuss what retirement is in general. Retirement is the time of life when one leaves the work behind permanently. The age of actual retirement now is 67. It used to be 65, but now it's been bumped up to 67. Some questions that you want to ask yourself is basically, what are you going to do when you retire? So let's discuss what a Roth IRA is. A Roth IRA is for ages 59 and under. And it's a special retirement account that you pay taxes on money going into your account, and future withdrawals are tax-free. So basically, you're putting money in at this point, which is taxed already. And when you take it out, you don't have to worry about taxes at the end. The money's going in now, taxed. And then when it comes out, funds that you have that accumulated over time and compounded, when you get to the retirement age and you take the money out, it is tax-free. Another point here is you can't contribute to a Roth IRA if you make too much money. In 2021, the limit for singles is $140,000, and for married couples, the limit is $208,000. So if you think about it, as you get closer to the $140,000, the money that you're able to put in, the more money you make. As you get towards the $140,000, the less you're going to be able to put into the Roth IRA. And the amount you can changes periodically. The limit is $6,000 a year unless you are ages 50 or over, but if you are 50 and over, you're able to contribute $7,000. This will help you with getting more money in to catch up because of your age. For this slide, what is a traditional IRA? A traditional IRA is an individual account, but it allows individuals to contribute pre-tax dollars to a retirement account where investments grow tax-deferred until withdrawals during retirement. When you're putting money in, you don't have to pay taxes, but when you take the money out, you will be taxed funds. Upon retirement, individuals are taxed on their current income tax rate when they are retiring. So say, for example, you retire at 65 and your income tax rate is 25%. That is what you're going to be taxed on at the age of 65 when you're actually retiring, okay? If it was, if you made millions and you're getting taxed at a higher rate, then it's going to be a higher rate when you retire. And contribution limits exist. So for individuals that are under 50, the max you could put in is $6,000. Anyone over 50, it's going to be $7,000. Also, you have to start taking funds out at the age of 72. So you can't, once you retire and say, for example, you want to continue to keep the money in there to 75, say, and let it continue to compound, they won't allow you to do that. So at 72 is when the time you're going to have to start taking funds out. Stop. Make sure that you subscribe, make sure that you like, and make sure that you comment on the information that is in this video. Now back to your regularly scheduled program. So let's look at the differences between a Roth IRA and a traditional IRA. The key difference between the Roth IRA and traditional IRA is the timing of their advantages. With traditional IRAs, you deduct contributions now and you will pay taxes on withdrawals later. With Roth IRAs, you pay taxes now, and at the point of retirement, when you withdraw, it's tax-free. With traditional IRAs, they kind of function like personal pensions. So in return, you get considerable, tax breaks. They restrict and dictate access to funds. Roth IRAs function more like regular, investment accounts. And only with tax benefits, they have fewer restrictions, but fewer breaks as well. I have a Roth IRA, and my Roth IRA is through Fidelity. But you can get a Roth IRA through a bunch of different institutions. If you look here on the slide, we have Fidelity, we have Vanguard, we have Charles Schwab. So you can get it anywhere. Just pick a financial institution that you desire and that you like, and just do your research and figure out which one that you want to kind of do business with. Like I said, I use Fidelity. Fidelity is good to me. I have other investments with them, so you basically just pick which one is best suits you. But the main thing is that you get started and that you want to start preparing for your retirement. I hope this has been helpful for you. Just give you a little insight to what it is to start preparing for your retirement. Now, the key thing is that you start early, okay? Start as early as possible. Use any one of these financial institutions to help you, because you don't want to be retired with no funds. You want to be retired somewhere comfortably. You want to be retired somewhere when you don't have to worry about any financial issues, any stresses. You want to be relaxing, enjoying the rest of your life. So you work hard now, play later, as opposed to working hard and working hard and working hard and working hard, and then you pass. Take this information and let's prepare, okay? Let's get together, let's get focused, let's get where we need to be. It's your boy, Hype Man Hampton, and I'm here to help you guys, okay, gain this financial information so you can be the best person you can be. It's your boy,